Property casualty initial licensing. We're going back to chapter 13 here for commercial liability. Commercial liability is going to be, of course, for business needing to cover liability insurance to cover their exposure to liability losses to third parties that can result from their business operations and professions. Commercial general liability policies, or CGLs, also called business liabilities, is the broadest of the liability policies, and it comes in two forms, either an occurrence or a claims made form. The big difference is going to be how the coverage is triggered. We're going to go over that in a little bit. So the CGL is going to be broken into 6 sections. Section 1, which is going to be the coverages. Coverage A is going to be for bodily injury and property damage. Coverage B is going to be for personal and advertising injury, non-physical injuries. Coverage C is going to be for medical payments. Under Section 2, who is an insured. Section 3 is going to be the limits of insurance. Section 4 is going to be commercial general liability conditions. Section 5 is going to be extended reporting periods, and Section 6 is going to be definitions. So we're going to go over the definitions here first. The occurrence. This is defined as an accident, also called an event. This includes continuous and repeated exposure to the same harmful conditions. Per occurrence and accident, the per occurrence combined single limit CSL is a sublimit in a liability policy that puts a ceiling on the payment for all claims that arise from a single accident or occurrence, regardless of the number of persons injured or properties damaged. The per person, this is going to be the maximum amount available for payment for bodily injuries to a single person in an accident, regardless of the policy limit stated in the policy for bodily injury claims. Multiple people can be paid out until the aggregate limit has been reached. Now, for the aggregate limit, this is going to be different for general versus product and completed operations. It's the maximum amount of coverage available under a liability policy during a policy year, regardless of the number of claims made or the number of events that occur. Losses paid under coverages subject to aggregate limits would reduce the amount available for future losses to the point that no future claims could be covered. Aggregate limits can be exhausted, meaning you can run out of money to pay the claims, but are going to be restored every year at the anniversary of the policy upon renewal. So the limits for the coverage for liability policies which do not contain aggregate limits, such as the personal liability and auto liability, are going to be automatically restored after each event. So this is a little bit different than the other types of liability that we've previously talked about up to this point. There are different exposures for commercial businesses. We're going to talk about those exposures. Premise and operations exposures are going to arise from losses at the premise and due to their operations either at or away from the premise. All bodily injury and property damage liability losses resulting from either the insured's operations or premises are going to be covered under the policy, subject to the exclusions and limits under the policy. So an example of a premise exposure would be slipping on a slick floor at an office building or falling down an escalator at a shopping mall. An operations exposure, 2 examples of this would be a carpenter dropping a hammer on a person at a work site, or an installer that drops an appliance that cracks your tile floor when they're doing the installation. Products and completed operations exposures are going to come from losses arising from products and or completed operations of the business. Products exposures are going to be for those that cause any bodily injury and property damage away from the premise from any products sold. Examples would be Takata airbags, Listeria and the Bluebell. And just FYI, even though you consume the food at a restaurant on premise, sometimes this will be called a products exposure. Completed operations exposure would be those that cause bodily injury and property damage after the job has been completed. Example would be a plumber that has a leak develop a year after the plumbing was installed, or contractor like a mason created a wall that collapsed 2 years after being built. due to faulty workmanship. Damage to property of others. This is also where you're going to have fire legal liability. This is a specific amount of coverage that is also included in there. This coverage pays for fire or other damage to property that the insured leases or temporarily occupies, things like conference expos or exposition spaces that were caused by the insured's negligence. Limited is usually $50,000. Shown on the deck page, and the maximum limit the insurer will pay per occurrence. The coverage is needed because liability policies exclude property in your care, custody, and control. Right, so this is property that's in your control temporarily while you're renting it out for the conference or exposition space. Liquor liability is typically excluded from a commercial general liability policy. In order to cover this exposure, you have to have specialty insurance called dram shop liability. Dram just an old English word for wee bit of alcohol, and basically any exposure caused by a intoxicated customer would be covered under that dram shop liability, right? So this is going to be the exposure that any bar, restaurant, or other similar establishment faces due to selling, distributing, manufacturing, or serving of alcohol. Now, you can have alcohol coverage if your business does not involve any of those things. And this is called host liquor liability. So this is an example of what can be included from an alcohol exposure for commercial liability. So host liquor liability would include the exposure of business for like a Christmas party where they served alcohol, right? Now the sections, coverage A under section 1 is going to be for bodily injury and property damage. This is going to include the duty to defend the insured, the first party, from the third party for its negligence. This is going to include supplementary payments. It's going to include all the legal defenses up to $250 a day for lost income until the aggregate limit's been reached. What is going to be excluded under this policy is going to be any expected or intentional injury. Any coverage that would be normally covered by workers' compensation or EPLI would be excluded. Liquor liability, as we've already discussed, pollution, aircraft, automobile, watercraft, professional liability is all going to be excluded under a CGL. Damage to property of others, including bailee coverage, is going to be excluded. Recall of any of the products is going to be excluded. And then contractual liability will be typically excluded, but there are 6 different ones that will be included. So they're included in coverage for the CGL. Even though they're part of the exclusions, they're exempted from the exclusions. They are contracts for lease premises, easement and license agreements, except in connection with construction or demolition within 50 feet of the railroad. Liability that the insured assumes under any contract that would have been imposed by law, even in the absence of the contract, sidetrack agreements or elevator maintenance agreements, and any obligations to indemnify a municipality. Coverage B, this is going to be personal and advertising injuries. CGL's coverage B is going to cover specific acts that result because of non-physical injuries to a third party due to offenses defined as injury to another's character, reputation arising from things like false arrest, wrongful eviction, invasion of privacy, slander, or libel, either oral or written in any manner, or oral written publication that violates or invades the privacy of another. Coverage C, this is going to cover medical payments to others. This is going to be for injuries to third party, and this is going to be considered goodwill coverage because payments will be paid without regard to fault of or negligence of the insured. Medical expenses must be incurred and reported within 1 year of the accident to be covered. What's going to be excluded under coverage C is going to be any bodily injury to or resulting from an insured, except for volunteer workers, employees, or anyone hired by the insured, and intentionally caused injuries. Section 2, who is an insured? So this is going to cover the CGL declarations. The individual named insured is for sole proprietors. This will have coverage for their spouse. It also will have coverage for partners and their spouses, but when the entity is incorporated, any kind of corporation, this will include the named insured and executive officers, directors, and stockholders, but only for their duties and liabilities to the company. And in this case, spouses are not going to be included. Section 3, limits of liability. So the CGL policy deck page is going to look a lot like what we see on page 154 there. Per occurrence limit of $1 million, $50,000 for damage to property rented, also known as FLL. Medical payments per person limit $5,000, and then personal and advertising injury limit of $1 million, general aggregate limit of $2 million, and products and completed operations aggregate limit of $2 million. So those last two are separate limits, and they're listed as such so that they kind of come in under both sides when we're doing an example of what comes out of that. So an example of this is going to be in the middle of page 155, whereas you have a general aggregate limit of $2 million under that ledger. You had an occurrence loss of $1 million, FLL loss of $50,000, medical payment loss of $5,000 each to 10 different people for a total of $50,000, personal and advertising injury loss under coverage B for $500,000 would then all be taken from that $2 million. And so for the remaining portion of the year, until that's been reset, would have $400,000 remaining of coverage loss payments. Separately, you can have the products and completed operations exposures, aggregate limit of $2 million. You had one product loss of $500,000. Aggregate limit remaining after that point would be $1.5 million. And then you had a second loss of $1 million, meaning that for the remainder of the year, your aggregate limit would be $500,000. As we discussed previously, supplementary payments are going to be paid by the CGL. All expenses necessary for the duty to defend and the insurance appearance for meals and lodging up to $250 a day for lost income, just like on a homeowner's policy. Occurrence and claims made form, right? We talked about this at the beginning. The difference between the two is going to be the trigger. The occurrence is going to respond to when the event occurred, and the claims made is going to be responding to when the claim was first made. Claims made forms is typically used for professional liability. These are going to have a retroactive date, which is going to be a date before which the policy will not pay for an occurrence. And these will also have what we call a basic extended reporting period or tail period, so that there's coverage after the expiration of the policy. There's an automatic, nothing needed on the part of the insured to get a 60-day mini tail. Standard basic extended reporting period or tail is 5 years, but you can purchase a supplemental extended reporting period endorsement to extend the tail beyond that 5 years. Professional liability, again, is typically going to be made on a claims made form. The difference on professional liability is that this is potentially going to cover what we call a criminal act, no criminal acts, but intentional acts. And this also includes the consent to settle clause, whereas under most liability, the insured has no say as to whether the insurance company is going to settle their claim out or whether they're going to go to court over it. In the case of professional liability, because it involves your reputation, the consent to settle clause is there, and the insured makes the decision as to whether or not the claim is settled, not the insurance company. One difference between the occurrence and claims made example here on page 157 is how the coverage will be covered. So the example that we give here under both the occurrence and the claims made example is that a business has two different policies here under the occurrence example. The company A switches over to company B's coverage on January 1st of 2012. And there was a customer injured on August 1st of 2011 and was sued by the insured, sued the insured on March of 2012. So in the case of the occurrence example, because the loss occurred under Company A's coverage, which is the trigger for the occurrence example, that's going to be covered under coverage Company A. Now that same situation happens under a claims made situation. The retroactive coverage date in this case is going to be July 1st of 2011 because it's going to be 6 months prior to Company B's policy effective date of January 1st, 2012. The customer injured on August 1st is after the retroactive date, and the claim was made in the period that had coverage under coverage B. So therefore, Company B will pay for that claim, right? And if there was a loss prior to July 1st, in that situation, there would be no coverage under that situation. All right, so professional liability is going to have different types. Employee errors and omissions, E&O insurance. This is going to be typical to insurance agents and brokers from financial losses they may suffer if an insured sues to recover their financial losses due to the agent giving incorrect advice, not placing requested coverage, or not informing the insured of important issues. This is going to be a requirement as an insurance agent to get contracted with insurance companies so that they know that you're going to be properly indemnified in the case that you do something wrong. Obviously, insurance agents aren't the only ones that do things wrong. So lawyers professional will cover anybody that is providing services such as giving financial advice or drawing up contracts in addition to providing legal advice or other legal services. This is going to be where lawyers professional will come in and pay for those exposures. For anybody in the medical or dental space, medical malpractice insurance is going to cover in these cases for liability arising out of malpractice, error, or mistakes made in rendering or failing to render professional services for those classes of medical professionals. Directors and officers insurance, this is going to cover for liability coverage protection to the directors and officers of an organization, both past and present, for any claims or for losses arising from a wrongful act that was made while acting in an official capacity. The coverage is triggered by wrongful acts rather than on an accident or occurrence basis. Wrongful acts include things like misstatements made by the directors and officers, neglect and breach of duty, wrongful hire of an officer, etc., but it is not going to cover things like criminal acts. The only insurance that is going to cover in the case of a discrimination or sexual harassment or abuse by any employee or owner is going to be employment practice liability. They like to sometimes talk about directors or lawyers doing certain things, but if it involves discrimination, sexual harassment, or abuse, this is going to be covered only by employment practice liability coverage. So any of the exposures that arise from that, any lawsuits that arise from that, will be covered by EPLI. And then the last one here is going to be fiduciary liability. This is going to protect employee benefit plan administrators from their acts of negligence, errors, and omissions in their handling of the funds, things like employee benefits, pension plans, etc. A covered loss example would be the purchase of a bad investment. All right, so some examples here under commercial liability. Coverage under an occurrence commercial general liability form is going to be triggered A, when the claim is first made against the insured during the policy period, B, by a covered event that occurs during the policy period, C, before the claimant notifies the insured of the damages caused, or D, all of the above. In this case, it's going to be B, by a covered event that occurs during the policy period. That's the definition of an occurrence commercial general liability form. Number 2, which of the following would typically not be excluded under coverage A, bodily injury and property damage of the commercial general liability policy? A, property damage to the property owned by the insured. B, property damage to property in the care, custody, and control of the insured. C, liability assumed under an incidental contract. Or D, libel and slander. So the one that would not be excluded is one of those leasum under incidental contracts. Liability assumed under the incidental contract will not be excluded under coverage A for property damage and bodily injury. Number 3, which of the following is excluded under coverage A, bodily injury and property damage of the commercial general liability policy? So this is a similar question to this last question, but it's asking which one would be excluded. A, damage to the insured causes intentionally. B, pollution losses caused by the insured. C, liquor liability for those businesses in the business of serving liquor. Or D, all of the above. In this case, all those exposures would be excluded under coverage A. So D, all of the above is the correct answer. Number 4, which of the following statements about the 60-day basic extended reporting period is not true? A, it becomes effective automatically if needed when a claims made policy expires. B, the insured must request it in writing within 60 days after the policy expires. C, it does not require an additional premium. Or D, no separate endorsement is required to provide this extended reporting period. So the correct answer here is going to be B. That is going to be the one that is a false statement about the 60-day basic extended reporting period. The insured must request it in writing within 60 days after the policy expires. That is not correct. Number 5, what is the purpose of the retroactive date in the claims made form? A, it's going to extend the period of time in which a claim may be covered under the policy. B, it stipulates the date as the first date on which an event may occur and be covered by the new policy if a claim is filed. C, extends the policy period. Or D, shortens the policy period. So in this case, it's going to be B, stipulating the date as the first date at which an event may be covered or may occur and be covered by the new policy if a claim is filed. Number 6, which of the following is a personal and advertising injury? A, telling a prospect that the other insurer is in financial difficulty. B, telling a prospect your policy is better when it is not. C, calling your client a cheat and a fraud. Or D, your dog biting a neighbor. The only physical and advertising injury here is going to be C, calling a client a cheat and a fraud. D is going to be a direct liability situation, and A and B are going to be things that you do not want to do, but they're going to be unfair claims or unfair trade practices, but not liability coverage exposures. Number 7, Jones Construction built a wall onto a building for a customer 6 months after the wall was completed. It collapsed, causing injury to the insured's property. This type of accident would be considered A, premise liability loss. B, a products and completed operations liability loss. C, a contractual liability loss. Or D, a personal injury liability loss. In this case, this is going to be B, a products and completed operations liability loss, specifically a completed operations loss. Number 8, in the CGL commercial general liability policy, which type of insured is the spouse also considered insured? A, partnership. B, corporation. C, LLC. Or D, trust. The only situation here that would be where the spouse is covered as an insured would be A, partnership. The corporation, LLC, and trust are all going to be not situations in which the spouse is considered an insured. Number 9, an insurance agent forgot to add a new car to the insured's personal auto policy. Several months later, the insured had a collision and the insured declined to pay and defend. So the insured sued the agent. Which coverage does the agent need to be protected? A, business auto policies. B, commercial general liability coverage. B, personal and advertising injury. C, a fiduciary liability policy. Or D, errors and omissions professional liability policy. In this case, it's going to be D, errors and omissions. E and O, professional liability. And number 10, John, as the director of his law firm, was sued for sexual harassment. Which type of liability does his policy does his firm need to provide a defense? A, directors and officers. B, lawyers professional. C, employment practices. Or D, fiduciary. In this case, it's C, employment practices, and that is because it is talking about sexual harassment. Even though he was a director of a law firm, directors and lawyers do not apply in this case because it is for sexual harassment. Only EPLI can cover in this situation. That's the end of commercial liability. Now we're going to move on to business auto policy, also commonly called commercial auto. For commercial auto, you're going to have 5 sections of coverage. You're going to have section 1, the covered auto, section 2, liability coverage, section 3, physical damage coverage, section 4, business auto conditions, and section 5 for definitions. Now understand that under commercial auto, medical payments, personal injury protection, and underinsured motorists are going to be added by endorsement only. The important to understand under section 1 for covered autos is that they use symbols under a covered auto section 1 to determine which business auto coverage form symbol is going to be used. You got to look at the chart on page 163. The ones in bold are going to be the ones that we focus on because those are the ones that are typically tested. Coverage symbol 1 is going to cover any automobile on the policy, including owned, leased, hired, or borrowed autos. So in this case, you generally don't need any VIN numbers or anything like that because they're going to deal with that just on a claims basis. Number 7, this is going to be requiring those VINs. It is the specifically described automobiles only, right? So these are going to be specifically listed, very similar to a personal auto policy. Number 8, hired autos only. Number 9 symbol is going to be for non-owned autos only. And number 19 is going to be for mobile equipment. This is going to be subject to the financial responsibility law only. Just understand that under mobile equipment, when you are under a commercial auto policy, you're not going to have under the situation where a mobile equipment like a bulldozer is being pulled off the trailer and then driven to the work site on a roadway. It's going to need to be having liability coverage for the exposure from when it's on the roadway and being operated as a motor vehicle. So another rehash of the definitions here of hired autos and non-owned autos. Hired autos are going to be autos that the insured leases, hires, or borrows, but not from employees or any partners or executive officers. And non-owned autos are going to be autos not owned or leased or borrowed by the insured, in this case the business, but are used in the business. This typically refers to an employee's use of his or her own personal automobile for business purposes, going to pick up supplies, going to the bank to make a bank run, those kind of things. Section 2 under liability, this is going to be the same limit situation as what we were talking about for a personal auto policy. So you can do split limits or you can do combined single limit. For who's an insured here, you're going to have who's listed on the deck page and anyone else while using the covered auto with the insured's permission, except for owners of the automobile, someone who's using the covered auto who is in the business of selling, repairing, or servicing, or parking or storing autos, and employees and partners for the autos that they owned, right? So the employees are not insured, but they can be added back by endorsement. If you have a specific situation where you've got somebody that needs to have coverage because they don't have a personal auto policy and they need excess coverage, they need a specific endorsement called individual named insured and drive other car endorsement. This will allow them to have that excess coverage as the driver when they do not cover personal auto policy themselves. Exclusions that are going to be here under the commercial auto are going to be pollution, injury to employees because it's going to be covered by workers' compensation, property damage or pollution involving any of the property owned or transported by an insured or in the insured's care, custody, and control. And then bodily injury and property damage caused by the operation of mobile equipment. And then any racing, demolition, or stunts, including preparations for such activities. So we did talk about having the combined single limit or split limits already, so that would be covered under that. Under Section 3, physical damage coverage, we give commercial auto a little bit more lenience here. You get two options when you're talking about physical damage coverage for the vehicles covered under the commercial auto policy. You can choose either OTC, other than collision, commonly known as comprehensive, or you can choose specified causes of loss. Comprehensive is going to be an open perils basis, and specified causes of loss is going to be a limited named perils basis only. This does save business owners money, but it does exclude certain things such as flood, glass breakage, and animal collision. So a lot of businesses will choose that, but just so you understand, you want to make sure that you inform them of the differences of what they're losing when they go with that cheaper coverage. And then, of course, collision, the single peril for coverage to losses of autos that result from a collision with an object, including an upset or an overturn. All right, Section 4, this is going to be business auto conditions. There is going to be a 90-day underwriting period on commercial auto, so it's a little bit longer than the traditional period for personal. It still does have a 10-day written cancellation notice requirement, and at the end of the policy, because this is a commercial policy, it does require a 60-day non-renewal, and outside of the underwriting period, a reason is required with the cancellation or the non-renewal to be provided to the insured if they decide that they are not going to continue the coverage. Separate coverage for specific types of businesses here, which we'll go over here in a second, for eligible risks are going to be covered under a garage insurance, which is a subset of a commercial auto policy or a business auto policy. So it's going to basically have the same sections. It's just going to be adding one additional section here, which is Section 3, garage keepers insurance, which is going to cover the bailee coverage, which is the main reason why this policy type exists. So eligible risks for this would be auto dealers. This would be including franchised and non-franchised. It's also going to include truck, tractor, commercial trailer dealers, motorcycle, recreational vehicle, and mobile home dealers, automotive repair shops, service stations, car washes, storage garages, and public parking facilities. One difference here that you're going to know right away if you're looking at a deck page for a garage commercial auto is that the symbols are going to be similar but slightly different than the standard commercial auto policies. So they're going to put a 2 instead or in front of the standard symbol. So if you're going to cover all autos under garage insurance, it's going to be a 2-1 instead of a 1. An example for specific autos would be 2-7. 2-8 would be for the situation where we're talking about hired autos only. 2-9 would be non-owned autos only, etc. Under Section 2, garage liability is going to be divided into 2 parts: garage operations for other than covered autos and garage operations for covered autos. Other than covered autos is going to require the loss or damage be a direct result of the insured's garage operations. This is going to be considered a premise in operations or product and completed operations exposure of the business. And then garage operations for covered autos is going to provide the insured for protection from losses resulting from the ownership, maintenance, and or use of those covered autos in the business. Extensions of coverage, medical payments coverage is provided in the form of personal injury protection, and under an uninsured motorist must be added by endorsement to the garage insurance. The exact same supplemental payments and out-of-state coverage is going to be provided under the business auto coverage form, which is the same as under personal auto. Section 3 is going to be the garage keepers insurance. This is the bailee coverage that covers the damage for which the insured is legally liable to a customer's auto that was left in the insured's care, custody, and control for either service, repairs, parking, or storage. Coverage and extensions and exclusions for the garage keepers insurance are the same as those under a business auto policy or commercial auto. Section 4, physical damage coverages. You got the same options that you do have there for the business auto standard form for commercial auto. So you've got OTC or specified causes of loss and collision. And Section 5, garage conditions are going to be exactly the same, identical as the regular commercial auto. And Section 6, under definitions, you've got garage operations defined as the ownership, maintenance, or use of locations for garage business, including adjoining roads and other accesses. It also includes the ownership and maintenance or use of covered autos and all necessary and incidental operations. Under products and work performed, these are defined as goods or products that are made or sold by the insured in the garage business. It also includes the failure to provide warnings or instructions. And under work performed, it includes the work that someone performed on the insured's behalf and the providing or failure to provide warnings or instructions to that person. All right, and we're going to go over some questions here. Number 1, employers who want to cover employees' use of their own cars in the business should have liability coverage apply to which of the following autos? Would it be A, fleet, B, non-owned, C, hired, or D, owned? In this case, non-owned autos of their automobile of the employees would cover B, non-owned situation. Number 2, you and your partner own an advertising business. Your unmarried son graduates from college and you hire him to do sales and provide him with a company-owned private passenger car. He sells his car and drops his auto insurance. What coverage or endorsement should you add to your business auto policy to protect your son in case he borrows a friend's car? Would this be A, drive other car and individual named insured, B, specified autos, C, hired autos, or D, non-owned autos? This is that specialty case of A, drive other car and individual named insured. Number 3, the insured buys and sells many autos for his fleet each year in his plumbing business. He wants the broadest coverage available under his business auto policy. Which symbol should the agent place on his policy? A1, B7, C8, or D19? A1 is going to be the correct answer here. Number 4, the insured only has the minimum limits to meet the required to meet the financial responsibility law of Texas on her business auto policy. She wants to send an insured auto and crew for a day job to another state that has higher limit requirements. What must she do? A, increase her limits to what the other state requires. B, buy a new policy in the other state. C, rely on the out-of-state coverage extension. Or B, buy an excess liability policy. Well, the thing that she has to do, what she must do, is going to be rely on that out-of-state coverage extension. So it's going to increase that to the other state minimum automatically. Number 5, the insured's employee is injured in a company car. How much will the BAP pay the employee? A, the medical payments coverage limit. B, the PIP coverage limit. C, the per person bodily injury limit. Or D, nothing. In this case, the answer is D, because it's going to be covered by workers' compensation because they're an employee. Number 6, the insured carries specified causes of loss and collision physical damage coverage on a BAP with a $100 deductible on his autos instead of OTC because it saves money. It will cost $500 to repair his windshield broken in a collision with a tree. How much of it will be paid under the specified causes of loss coverage? A, $500, B, $400, C, nothing, or D, the actual cash value minus the deductible. In this case, this is going to be C, nothing, because specified causes of loss do not include any glass breakage under the policy. Number 7, which of the following businesses might not be covered under a garage coverage form? A, the used car dealer. B, the limo operator. C, the auto body shop. Or D, the service station. In this case, limo operator B is going to not be covered under a garage coverage form typically. Number 8, which of the following coverages is not included in an unendorsed garage policy? A, garage keepers. B, uninsured motorists. B, C, premise liability. Or D, physical damage. In this case, this is going to be uninsured motorists is not going to be included in a unendorsed garage policy. They can endorse it for that and add that in, but it is not going to be standard. Number 9, the garage liability policy covers the insured's A, premise and operations exposure, B, the products and completed operations exposure, C, medical payments, or D, both A and B. In this case, it's going to cover premise and operations exposures and product and completed operations exposure, so D, both A and B is the correct answer. And then number 10, garage keeper's liability covers the insured's A, owned autos, B, customers' autos, C, non-owned autos, or D, garage operations. In this case, this is only going to be for garage keeper liability under Section 3. It's going to cover the customer's autos. That is the end of this section on commercial auto.